Welcome back here with us on Trading Hour. As promised, let's get you some perspective with Aditya Sood, who handles several portfolios at InCred PMS. Aditya, good to have you on the show. Let me get the first thing out of the way, and that is gold finance, because as we just discussed, you do have Muthoot Capital in your portfolios, not Muthoot Finance, but Muthoot Capital. But, just your sense on what's going on in the gold financing arena. First, there was this relentless competition with banks, and now we have the RBI watching things, with a hawk eye. Your sense on this business, and what is the growth runway you see ahead with the regulatory scrutiny as well?
I think so. If you look at the long-term trends in gold financing business in a country like India, I think so the loss given default has been negligible. It has been less than 1%. So it continues to be a very exciting space within lenders, and especially if you are very, very cautious on, the lending cycle. You need to be constructive on secured lending, obviously, and gold, the loss given default is negligible. So the call that we had taken was that, rather than playing gold finance through NBFCs, we'll play it through the banks, since banks were getting aggressive. And CSB happens to be, one of our portfolio companies, wherein, obviously, they had a 40% exposure towards gold lending. I think so regulatory angle needs to be evaluated while evaluating, a lot of these NBFCs, because what we are seeing of late is that as we mature in the credit cycle, obviously regulatory headwinds is something that one needs to be careful about. But our clear-cut preference has been to play it through the banks, since the banks themselves are getting very aggressive. In the past, that they have not focused. And in our conversations with most of these banks, and be it, the larger banks, everybody wants to focus at least on the banking side in terms of, focusing on the gold finance market.
Aditya, morning. It's been a month since our last conversation, and I can see that BEML is no longer a part of your portfolio. So do you want to tell us some of the activity that you've done on the buy and sell side in the recent past?
Sure. So, we had invested into BEML, 16 months back. The stock price was pre-demerger, wherein land assets got spun off. And we took this opportunity of a rally in BEML stock price, because our view was that, it is trading closer to, although the long-term story is very, very intact, but our view was that it is trading closer to FY26 fair value. So that is why we took some money off the table. We have of late been very, very constructive on the small appliances space. And we have bought into a company known as Orient Electric and increased our weight in Stovecraft as well. Our thesis is predicated on the belief that rural should recover. So if you look at the rural construct today, broadly, what we are seeing is that, the CPI inflation is down from 7.6 to 5.3%. The unemployment rate for rural is down from 8% to 5.8%. Typically, in an election year, rural should rebound. We are seeing some green shoots there. Obviously, it is getting reflected in two-wheeler stocks as well. We have been very, very positive on two-wheeler, both the OE and ancillary construct. We have seen MSP price hike, which is closer to 50% to cost of production, which is a decent MSP number to have. So as a construct of all of this, we are very, very bullish on staples as well as smaller appliances. I think so there was an element of destocking that went through, particularly on the fan side, that is behind us. So our belief is that the BLDC within fan as a premium segment should do well going forward.
That's an interesting call, Aditya. You mentioned staples, right? Consumer staples, FMCG. That's something you're positive on. And this is an underperforming part of the market. So what kind of companies do you like at the moment?
So Dabur is something that we like. If you look at the numbers closely, what you are witnessing is that, volume growth has been very, very tepid in most of these names. Last quarter, Dabur reported a 4% volume growth number. I think so we are in a very, very early stage of recovery here. So any company which has, obviously done the hard work in terms of expanding its distribution reach and focusing more on rural as a go-to market is something that we like, and Dabur clearly stands out here.
Okay. Any other, consumer staples, small appliances is something that you're bullish on. In our last conversation, you also said that you were looking at QSRs because QSRs were beaten down, they were out of flavor. And I don't think you had bought anything by then, but you were just checking whether it meets the criteria for you to enter. So what has been the, the studies, the analysis that you've done on QSRs?
So we have invested into one company known as Barbecue Nation. One is that, obviously the company got IPO'd, the stock was on listing, it was, closer to 550 rupees, it rallied to 1600. And again, we see, this stock has not done well. Now, two part of the QSR thesis is that, you have to buy QSR companies when same store growth is not negative. And obviously that is a function of us believing that, there is going to be mean reversion in terms of same store growth. So that is the first thesis that we have. Basically buying, secular businesses in a down cycle. That is how we would like to think about it. The second thing here is that, most of the QSR companies, if you evaluate, there is going to be an element of mature stores. So for example, in a Barbecue Nation, out of 16 stores that they have got 160 stores which are mature. Now, if you look at the return on capital employed of mature stores, it is in excess of, 20%. So clearly, this is a interesting business from a consumer lens standpoint. If you look at the new stores that they have rolled out in the last 2-3 years, obviously some of these would be loss making because typically, for a Barbecue Nation, they take, 2 to 3 years for a store to break even. And then there are the corporate overheads. So our view is that, if I look at the company today, it is trading at, 2 times trailing sales. Lot of unlisted comps in this space are closer to, 4 times sales in terms of ARR. So what we believe is that, there is significant value. Obviously, it is a very well-known fact that Jubilant Foodworks owns, closer to 10% in a Barbecue Nation, and they had made this investment at the peak of COVID, at 400 rupees a share. So what we essentially see is that, there is limited downside, and obviously this is a buy and hold for 3 to 5 years. Our view is that, this is going to be a company wherein, decent compounding can happen, as well as you are buying into optionality of multiples to expand going forward.
Okay, interesting thesis there, Aditya. Good to have you on the show and good hearing about some of the interesting bets that you've taken. We look forward to our next conversation. So you have a good rest of the day. On that note, we do have to take a very quick break. Come back on the other side, and we have a couple of other important stories lined up for you. We'll give you more details on the recent buzz in the life insurance space with respect to surrender value. Back with that in just a bit.